imagine this scenario. Maybe it applies to you. You've been living overseas, maybe for work, or maybe you're retired abroad, and you've opened a local bank account, right? Just for everyday stuff.
Yeah, seems pretty normal.
Or maybe you got a small inheritance from a relative in another country, or perhaps you own a mutual fund and you don't even realize it holds some international investments.
Okay, I see where you're going with this.
So here's the big question. Do you actually know if you have to tell the U.S. government about those foreign assets? Is there some reporting you need to do?
That's the million-dollar question, isn't it?
It really is. Okay, let's try and unpack this today. We're doing a deep dive into two really critical forms that often get confused, frankly.
Which ones are we talking about?
We're looking at FinCEN Form 114. Most people know that one as the FBAR and also IRS Form 8938, the Statement of Specified Foreign Financial Assets. It sounds complicated, I know.
It can seem that way. And what's really fascinating, I think, is that even though both forms deal with foreign assets, they have totally different purposes, different thresholds, different rules.
Right.
So our mission today really is to cut through all that jargon. We want to give you clarity on who needs to file which form. Maybe you need to file both. And also, the why behind it all.
So you can feel confident about what you might need to do.
Exactly. Confident and informed.
And just so you know, we're pulling all this information straight from the horse's mouth, basically. We're using the official government instructions for both the FBAR, that's FinCEN 114, and the IRS Form 8938.
Getting it right from the source. Good.
Okay, so let's kick things off at the FBAR, the Foreign Bank Account Report. It sounds, I don't know, a bit intense, like something from a spy movie.
Yeah, the name does sound a bit dramatic.
But it's a real thing, a real financial document. So, what's the FBAR really all about? What's its main goal?
Well, at its core, FinCEN Form 114, the FBAR, it's used to report if you have a financial interest in or signature authority over a foreign financial account.
Financial interest or signature authority. Well,
right. And here's a really key point. This form goes to FinCEN, that's the Financial Crimes Enforcement Network. It doesn't go directly to the IRS.
Okay. So different agency entirely.
Exactly. It's primarily a tool to help fight, money laundering and other financial crimes by tracking money held overseas.
Got it. So who exactly is considered a United States person that might need to file this FBAR?
That's a good question because the definition is quite broad.
Yeah.
It includes U.S. citizens, obviously. That also includes minor children, by the way.
Even kids? Wow.
Yep, also U.S. residents. And then entities like corporations, partnerships, LLCs, if they were created or organized in the U.S., and also U.S. trusts and estates.
So it covers a lot of ground, individuals and businesses.
It really does. If there's a strong U.S. connection and foreign accounts are involved, FBAR is potentially in play.
Okay, and this is the part I think catches people out sometimes. What's the trigger, the dollar amount? Because I hear it's lower than you might think.
You're absolutely right. This surprises a lot of people. A U.S. person has to file an FBAR if the aggregate value, that's the key word of their foreign financial accounts, goes over $10,000 at any time during the calendar year.
Aggregate value? So wait, you add up all your foreign accounts?
Precisely. You look at the highest value each account reached during the year, add all those maximums together. If that total pops over $10,000, even for just one day.
Just one day.
Just one day. Then you have an FBAR filing requirement for that year. It's a surprisingly low bar.
$10,000 aggregate.
Yeah.
Wow. Okay, so what kind of things actually count as a financial account for this? Is it just like a regular bank account?
It's broader than just checking and savings, although those are definitely included. Think securities accounts, brokerage accounts, time deposits,
Okay.
also commodity futures or options accounts, even things like insurance policies or annuity policies if they have a cash value.
Like a whole life policy.
Exactly. And
Yep.
shares in a mutual fund or a similar pooled fund, provided it's held in a foreign financial institution. It's pretty comprehensive.
Okay, so quite a few types of accounts. And what makes an account foreign? Is it where the bank's main office is or where the actual branch is located?
It's all about the physical location of the account itself. So say you have an account with a branch of a big U.S. bank, but that branch is physically located in London.
Right.
That is a foreign account for FBAR. But flip it around. If you have an account with a branch of say a Swiss bank, but that branch is right here in New York.
Then it's not foreign.
Correct. It's not considered foreign for FBAR purposes because it's located in the U.S. It's about geography, not the bank's nationality.
That's a really important distinction. Okay. Now, you mentioned earlier financial interest versus signature authority. Can you break that down a bit? Maybe like what's the difference in plain English?
Sure. Think of it like this. Financial interest generally means it's your money. You own the account directly or indirectly. You're the owner on record, or maybe you own, say, more than 50% of a company that owns the account.
Okay, so ownership.
Right.
Yeah.
Signature authority, on the other hand, means you can control the money. You can tell the bank what to do with it, like sign checks or authorize transactions, even if the money isn't technically yours.
Ah, like maybe an employee managing a company account overseas.
Exactly. Or a parent managing a foreign account for a child. You don't own it, but you control its disposition. And both financial interest and signature authority can trigger an FBAR filing requirement.
Okay, that makes sense. So let's say you figure out, yep, I need to file this. When do you do it and how? Is it paper forms?
Good question. It's an annual thing.
Yeah.
And you must file it electronically. No paper option for most people. You use FinCEN's VSA e-filing system online.
Okay, electronic only. And the deadline.
The official deadline is April 15th of the year following the calendar year you're reporting on. So for 2023 accounts, the deadline was April 15th, 2024.
April 15th, same as taxes. But I heard something about an extension.
Yes, and this is a big one. FinCEN grants an automatic extension to October 15th every year.
Automatic. So you don't have to like fill out a form to ask for it?
Nope.
Yeah.
No request needed. It just happens. It gives people an extra 6 months, which is, incredibly helpful.
That is helpful. Okay, so when you're filing, how do you figure out the value? What exchange rate do you use?
Right. Valuation. You need to find the maximum value each account reached during the year in its own currency. Then you convert that maximum value to U.S. dollars.
Using what rate?
You use the U.S. Treasury's Financial Management Service exchange rate from the last day of the calendar year, December 31st rate, even if the maximum value occurred earlier in the year.
Okay, end of year rate for the conversion. What if the value is negative?
Good point. If an account has a negative value, you just report 0 for FBAR purposes, and always round the positive values up to the next whole dollar. No cents.
Got it. Round up, 0 for negative. And records. How long do you need to keep proof?
You need to keep records for 5 years. That includes things like the account name, the account number, the name and address of the foreign bank, the type of account, and of course that maximum value figure you calculated.
5 years. Okay, now what about kids? You mentioned minors need to file. How does that work practically?
Yeah, it's a bit tricky. Generally, the child is the one responsible for filing their own FBAR if they meet the $10,000 threshold.
But what if they're like 5 years old?
Exactly. If the child can't file it themselves, maybe due to age or something else, then a parent or legal guardian must file it for them. The parent signs electronically and makes a note on the form in item 45 saying parent guardian filing for child.
Okay, so the responsibility falls to the parent or guardian if the child can't do it. Makes sense. Now, the scary part. What happens if you just don't file? Maybe you didn't know, or you forgot. What are the penalties?
Yeah, the penalties can be pretty severe, which is why it's so important to get this right. If it's considered a non-willful failure, meaning you didn't intentionally avoid filing the civil penalty, can be up to $10,000 per violation, so per account, per year, potentially.
Ouch, $10,000.
But there is a reasonable cause exception. If you had a good reason for not filing and you can show that, and you properly report the income from the account, they might waive the penalty for non-willful failures.
Okay, reasonable cause might help. What if it's willful? Like you knew you should file and didn't?
That's where it gets really serious.
Yeah.
For willful failures, the penalty can be the greater of $100,000 or, get this, 50% of the balance in the account at the time of the violation.
50%, wow.
Yeah, per year. And on top of that, there can be criminal penalties too. So the government takes willful non-compliance very, very seriously.
Okay, message received. FBAR is not something to ignore. Significant penalties.
Definitely not.
All right, so we've kind of wrapped our heads around the FBAR going to FinCEN, that $10,000 aggregate threshold. But that's not the end of the story.
Not quite. There's another player on the field.
Right. The IRS wants its own piece of information. Let's pivot now to IRS Form 8938. This one's different. It goes directly to the IRS, part of your tax return. How does this fit into the whole foreign asset picture?
Exactly. Form 8938, the Statement of Specified Foreign Financial Assets, its purpose is to report certain foreign financial assets if their total value hits an applicable reporting threshold. And like you said, the absolute key difference, you file it with your annual income tax return, it's attached right to your Form 1040 or other return.
So it's directly tied to your taxes.
Okay.
Who has to file this one? Is it the same U.S. person as FBAR?
It's similar, but the terminology is slightly different, and there are nuances. You have to file Form 8938 if you are a specified person, and you have an interest in specified foreign financial assets above the threshold.
Specified person. Okay, what's that?
A specified person can be a specified individual. That includes U.S. citizens, resident aliens, and even certain non-resident aliens who like to be treated as residents or live in certain territories.
So mostly individuals.
Mostly, but it can also be a specified domestic entity. This is more complex, but generally, think certain closely held U.S. corporations or partnerships that have a lot of passive income or assets, or certain U.S. trusts that has specified individuals as beneficiaries.
Okay, so individuals mainly, but some specific types of U.S. entities too. But here's something really important I saw in the instructions, a major difference from FBAR.
What's that?
It says, if you do not have to file an income tax return for the tax year, you do not have to file Form 8938, even if your foreign assets are, like, huge.
That is a critical distinction. Absolutely spot on. FBAR filing is independent of whether you file taxes. Form 8938 filing depends on you having an income tax return filing obligation in the first place. No tax return due. No Form 8938 due.
That's a huge difference. Okay. Now, what counts as a specified foreign financial asset for Form 8938? You said FBAR was mostly accounts. Is this broader?
It is definitely broader in scope. So, yes, it includes financial accounts maintained by foreign financial institutions, similar to FBAR, but crucially, it also includes other foreign financial assets that might be held for investment and aren't necessarily in an account at a financial institution.
Like what kind of things?
Think stock or securities issued by a non-U.S. entity, if you hold them directly, not through a U.S. broker, for instance. An interest in a foreign entity itself, like a partnership or foreign corporation. Financial instruments or contracts where the issuer or counterparty is foreign. It captures more types of investment assets.
Okay, so potentially things FBAR wouldn't cover. And what about accounts in, say, Puerto Rico or other U.S. possessions? FBAR usually excludes those, right?
Correct. For FBAR, they're generally not considered foreign. But for Form 8938, accounts maintained in U.S. possessions are generally included in specified foreign financial assets. Another difference to track.
Got it. Okay, so if the assets covered are broader, what about the filing thresholds? We know FBAR is $10,000 aggregate. Are the 8,938 thresholds similar?
Not at all. They are much, much higher than the FBAR threshold, and they vary quite a bit depending on your filing status and whether you live inside or outside the U.S.
Okay, give me some examples, like for someone single living here in the States.
Okay, for an unmarried taxpayer living in the U.S., you generally need to file Form 8938 if the total value of your specified foreign financial assets is more than $50,000 on the last day of the tax year, or more than $75,000 at any point during the year.
50,000 or 75,000, much higher than FBAR's 10,000. What about, say, a married couple filing jointly but living abroad?
For married couples filing jointly who live abroad and meet certain presence tests, the threshold jumps way up. It's over $400,000 on the last day of the year, or over $600,000 at any time during the year.
400 or 600,000, big difference based on residency and filing status.
Huge difference. And for those specified domestic entities we mentioned, their threshold is generally the $50,000, $75,000 one, similar to singles living in the U.S.
And that at any time during the year, rule is just as important here as with FBAR, right? Even if you sell something.
Absolutely. Let's use an IRS example. Say you're single, live in the U.S., and your only foreign asset was some stock you sold on October 15th. On that date, it was worth $125,000. Even if you held zero foreign assets on December 31st.
You still have to file 8938.
Yes, because the value exceeded $75,000 at some point during the year. That peak value matters, just like with FBAR, but against these higher thresholds.
Right. OGA valuation for 8,938, similar process. Fair market value, exchange rate.
Pretty similar concepts, yes. You generally use the fair market value of the asset. For converting foreign currency, you again typically use the U.S. Treasury Bureau of the Fiscal Service exchange rate for the last day of the tax year, December 31st rate again.
Even if you sold it mid-year, use the December 31st rate.
Generally, yes. That's the rate specified for consistency in reporting the value in USD. And like FBAR, if an asset has no positive value or a negative value, you report zero.
How about jointly owned assets on 8938? Is it different from FBAR?
The rules are a bit more specific here. If you're married filing jointly, you and your spouse report the total value of the jointly owned asset once on your joint Form 8938.
Okay, makes sense.
But if you're married filing separately, you each report 1/2 of the value of the asset you own jointly.
half each if filing separately.
And if you jointly own an asset with someone who isn't your spouse that you're filing with, then each owner includes the entire value of the asset on their respective Form 8938 when figuring out if they meet the threshold of what to report.
Wow, okay. So if I own something 50-50 with my brother, we both report the full value.
For purposes of determining your filing threshold and reporting requirements, yes, that's generally how it works for non-spouse use joint owners.
Interesting. Okay, are there any foreign assets that are specifically excluded from Form 8938 reporting? Things you don't have to list?
Yes, definitely. A key one is financial accounts maintained by a U.S. payer. So think your regular U.S. brokerage account, even if it holds foreign stocks, or U.S. mutual funds, even if they invest internationally. Your IRA, your 401k, those are generally excluded.
Ah, okay. So if it's held through a U.S. institution, probably not on 8938. What about avoiding double reporting? Like if I already reported a foreign company on another IRS form?
Great question. That's another crucial point about Form 8938. If you're already reporting certain foreign assets on other specific IRS forms, common ones are Form 3-520 for foreign trusts, Form 5471 for controlled foreign corporations, Form 8621 for PFICs, or Form 8865 for foreign partnerships.
Right, those complex international forms.
Exactly. If you're filing those forms and reporting the asset there, you generally do not have to report the same asset again in detail on Form 8938.
Oh, that's good. Avoids duplication.
It does. However, and this is really important for individuals, the value of those assets reported on other forms still counts towards calculating whether you meet the Form 8938 filing threshold.
Ah, okay. So you don't list the details twice, but the value still matters for the 8938 threshold test.
Precisely. You typically just check a box on Form 8938 indicating you've filed the other relevant forms.
Got it. Okay, and penalties for Form 8938, similar to FBAR. Serious stuff.
Very serious, yes. There's a $10,000 penalty for failure to file Form 8938 when required.
$10,000 just for not filing it.
Yes. And if the IRS sends you a notice about it and you still don't file within 90 days, they can impose additional penalties of $10,000 for each 30-day period you continue not to file, up to a maximum additional penalty of $50,000.
Wow, so it can stack up quickly.
It can. Plus, there can be substantial accuracy-related penalties like 40% of the underpayment of tax if it's due to undisclosed foreign financial assets. And, of course, potential fraud and criminal penalties as well.
Okay. Is there a reasonable cause defense here, too?
Yes, the reasonable cause exception can apply to avoid the failure to file penalties. But crucially, the instructions state that relying on foreign laws that might prevent disclosure is not considered reasonable cause by the IRS.
Good to know. So you can't blame foreign bank secrecy laws?
Not according to the IRS, no.
Okay. Wow. We have covered a ton of detail on both FBAR and Form 8938 individually. So, after all that, let's get to the million-dollar question maybe for some listeners. Are these basically the same thing? If I file one, am I covered? Or do I really need to worry about both?
That is absolutely the critical takeaway,
Yeah.
and the answer is crystal clear. No, they are not the same thing. Filing one form, whether it's the FBAR or Form 8938, absolutely does not relieve you of your responsibility to file the other if you're required to do so.
Okay, so they're separate obligations.
Completely separate. Different agencies, different rules, different purposes. You could be required to file only FBAR, only Form 8938, both, or neither, depending entirely on your specific situation.
Right. So let's really hammer home those key differences one more time. Just bullet points. What are the main ways to tell FBAR and Form 8938 apart?
Okay, let's break it down.
First, who do you file them with?
FBAR goes to FinCEN, the Financial Crimes Enforcement Network. Form 8938 goes to the IRS, attached to your tax return.
Got it. Agency difference. What about what you report?
FBAR is primarily focused on foreign financial accounts. Form 8938 covers specified foreign financial assets, which is broader, it includes those accounts, plus other assets like stock held directly in foreign companies, interest in foreign entities, etc.
Okay, broader scope for 8938 assets. Who files?
FBAR is for any U.S. person with either a financial interest or signature authority. Form 8938 is for a specified person, mainly individuals and certain entities, generally based on financial interest, not just signature authority.
Thresholds. Big difference there, right?
Huge difference. FBAR kicks in at a relatively low $10,000 aggregate value across all accounts. Form 8938 has much higher thresholds, starting at $50,000 and going up significantly based on filing status and residency, and it looks at total specified assets.
And that signature authority point.
FBAR explicitly requires reporting based on signature authority alone. Form 8938 is focused on assets in which you have a financial interest.
Filing method.
FBAR is its own separate electronic filing through FinCEN's system. Form 8938 is physically attached to your income tax return filed with the IRS.
And that overlap question again. Does filing one excuse the other?
Absolutely not for FBAR versus 8938. They are independent. Now, filing Form 8938 might mean you don't have to relist assets already detailed on other IRS forms like 54701 or 8621, but you still have to count their value for the 8938 threshold if you're an individual.
Okay. Phew, that was definitely a deep dive. It's so clear now that, this isn't straightforward. It's not a one-size-fits-all thing at all.
Not a slight.
I think the biggest takeaway for you listening has to be that FBAR and Form 8938 are distinct. They're separate requirements. If you have any foreign financial assets, you really need to look closely at both sets of rules.
Exactly. And this really raises, I think, an important point. Given how complex this can be, and we saw the penalties are quite significant.
Yeah, very significant.
It's really wise to be proactive. Take a look at your situation. Don't just assume, oh, I don't make much income or my accounts aren't that big. It means you're automatically clear. One rule might not apply, but the other one could.
Right. Don't make assumptions.
Definitely not.
Yeah.
Understanding these differences we talked about today is really your first essential step towards making sure you're compliant and, honestly, just having peace of mind about it. It really reflects how global finance works. Now, transparency is key.
Well, we certainly hope this deep dive has given you the knowledge you need to feel more confident navigating this potentially tricky area. Remember, being informed, knowing these rules, that's really your best defense against getting caught out by penalties you didn't expect.